Hello, welcome back to our channel Think Investments. In this video, we will be discussing Ray Dalio's latest warning about the future of the global economy. Dalio, one of the world's most successful investors and founder of Bridgewater Associates, has been warning about the dangers of the current economic system for several years now. His latest warning is his most dire yet, and he believes that most people have no idea what is coming. In fact, he has been sounding the alarm about the growing wealth gap, political instability, and unsustainable debt levels for years, but his warnings have largely gone unheeded. However, with the current state of the global economy, it's more important than ever to pay attention to his message. So let's dive into the details of his warning and what we can do to prepare for the impending crisis. Ray Dalio has been warning about the dangers of the current economic system for several years, and his latest warning is his most dire yet. He predicts that the growing wealth gap between the rich and the poor is fueling social unrest and political instability, which will lead to a financial meltdown worse than the 2008 crisis. The central bank's monetary policies, which have been used to prop up the economy since the 2008 crisis, are no longer effective, and interest rates are already at historic lows. Additionally, the massive debt burden that many countries are facing, with the total global debt reaching a staggering $250 trillion, is unsustainable and will eventually lead to a debt crisis. According to Dalio, the next crisis will be much worse than the previous one, as the central banks have fewer tools to deal with it. He predicts that we will see a significant devaluation of currencies, massive wealth transfers, and a wave of bankruptcies and defaults. In short, the next crisis will be a systemic breakdown of the global economic system, and it's essential to take steps to prepare for it by diversifying portfolios, reducing debt, increasing cash holdings, investing in emerging markets, and making structural changes to the economic system to address the wealth gap and reduce social unrest. It's important to note that while these measures may not prevent the crisis from happening, they can help individuals and countries prepare for it and mitigate its impact. As Ray Dalio warns about the impending economic crisis, it's essential to take steps to prepare for it. Here are 5 steps that individuals and countries can take to mitigate the impact of the crisis. Number 1, diversify your portfolio. Investors should consider diversifying their portfolios to include assets that are not correlated with the stock market, such as gold, real estate, and commodities. This can help protect against market volatility and reduce risk. Number 2, reduce debt. Individuals and countries should work to reduce their debt burden to prepare for the crisis. This will make it easier to weather the storm when it hits and reduce the risk of default. Number 3, increase cash holdings. Cash will be king during the crisis, so it's essential to have enough cash on hand to cover expenses and take advantage of buying opportunities. This can help individuals and countries weather the storm and take advantage of opportunities that arise. Number 4, invest in emerging markets. Emerging markets are more likely to weather the crisis, as they are not as heavily indebted as developed countries. Investing in emerging markets can provide diversification and reduce risk. Number 5, make structural changes. Governments should make structural changes to the economic system to address the wealth gap and reduce social unrest. This could include measures such as increasing taxes on the wealthy and implementing a universal basic income. While these measures may not prevent the crisis from happening, they can help individuals and countries prepare for it and mitigate its impact. In conclusion, Ray Dalio's warning about the impending economic crisis is a wake-up call for all of us. The global economic system is unsustainable, and we are headed towards a major crisis that will have far-reaching consequences. However, by taking steps to prepare for the crisis, we can mitigate its impact and come out stronger on the other side. It's essential to diversify our portfolios, reduce debt, increase cash holdings, and invest in emerging markets. We also need to make structural changes to the economic system to address the wealth gap and reduce social unrest. We hope this video has been informative, and if you enjoyed it, please give it a thumbs up and share it with your friends. Don't forget to subscribe to our channel for more videos like this. Thank you for watching, and we'll see you in the next video.